The only home buying contingencies that matter in states like New York where properties are sold as is are the financing contingency and the sale contingency if you need to sell in order to buy. The appraisal contingency and minimum loan amount contingency is included in standard financing contingency clauses, and the clear title contingency is included by default in most stock contracts. Mortgage contingency. The mortgage contingency gives home buyers a set period of time after a contract has been fully executed to back out if they can't secure a mortgage commitment letter. The contingency period is negotiable, but it's common to see 45 days as a typical term for the mortgage contingency. Appraisal contingency. The appraisal contingency allows a buyer to cancel a fully executed contract if the appraised value comes back at too low of a value, such that the bank cannot loan at the originally intended loan-to-value and loan amount. Minimum loan amount contingency. A minimum loan amount contingency specifies the exact loan amount that the buyer will be seeking and allows the buyer to exit a signed contract if the bank refuses to lend the anticipated amount. Sale contingency. The sale contingency, also known as the Hubbard contingency, allows a buyer a set period of time to obtain a fully executed contract on their current home before having to either waive the contingency or walk away. The house sale contingency is extremely unattractive for home sellers because they'll have little insight or control in the buyer's own sale process. Assuming the buyer needs to sell in order to buy, there's a high risk that the buyer won't be able to find another buyer and will thus have to exit the deal. Sellers can typically continue looking for other buyers during the contingency period. However, the seller must give the buyer an option to waive the contingency if another buyer is found. Otherwise, the seller has a right to cancel the original buyer's contract and to proceed with the new buyer. Inspection contingency. The inspection contingency provides a buyer a certain period of time to have a home inspection done by a licensed home inspector. Based on the findings, the buyer can either back out or move forward with the deal. Depending on the exact contingency language, the buyer can also negotiate after inspection for the seller to make repairs or provide a concession on price. Inspection contingencies are unheard of in states like New York, where properties are typically sold as is. In New York, the principle of caveat emptor, buyer beware in Latin, applies and is still up to the buyer to do their own due diligence before buying a property. In fact, the seller property disclosure form in New York is typically not filled out, and instead, the seller will credit the buyer $500 at closing in lieu of doing so. As a result, in most states that follow New York's example, there's no need to make inspection a home closing contingency. You simply do an inspection before signing a contract, and if you don't like what you see, you can renegotiate or back out before signing a contract. Clear title contingency. The clear title contingency allows the buyer to exit the contract if the property is not delivered with the title that is free and clear of any liens or encumbrances.